All right, so you're asking about what's the way to go through and figure out which profile is in play. So let's talk through process of elimination. So we're going to use 2 days and kind of look at ways to identify the different profiles that are at play. So a lot of things in ICT's world will start off with ranges. And you start your range off, you framed your day with midnight, about the Asian range. You're using the Asian range combined with the London range. You're using the range between midnight and 8:30, and you're getting yourself set up for the AM session, PM session, and you're merging all of these things together. So let's try and simplify a quick way to the process of elimination. So first off, liquidity. Frame out your ranges, looking for where liquidity is taken and then what liquidity is left. So that's one quick way. So if London's sell side is taken but Asia's is not, then the liquidity remaining is buy side. So London sell side is this blue, the midnight to 8:30 range is green, Asia is highlighted here. So we start off the day at midnight, we look back at Asia, and we see that we're rallying through Asia. Midnight kicks off, we have our true day open here. We're gonna see that price will skate around the midnight open, so just visually, midnight open is here. We skate around the midnight open, we make a high, we make a low between 3 and 5 o'clock. Then we see consolidation, digging down into sell side, but leaving Asia's low protected. We also now create that midnight to 8:30 range. We see 9:30 kicks off, and that surge of orders pushes to buy side, clears above that midnight open one more time. Midnight open gets tested, we kick off the Silver Bullet. Silver Bullet runs the range high, so now we are sure that we have a model B, which is a continuation. I'm just dubbing it model B, but it's basically a continuation, whereas a classic model A is your reversal. So our range gets broken significantly. We don't see price break a swing low. Instead, we see sell side getting defended, and each time price breaks a previous swing high, we're looking for a retracement continuation. Breaks the swing high, retracement continuation up to a predetermined area from our daily chart. So how do we use this along with the profiles to start doing a process of elimination? Well, firstly, the AM session, you're going to use the previous range, including all the information from Asia, to see what liquidity was taken, what liquidity remains. In the AM session, you're using that to really narrow down what could the PM session be. So let's jump back into this here, and let's take a look at the different profiles that exist. So month 8 and month 10, ICT takes us through different profiles. There are only 6 intraday profiles, and in fact there's only 3 profiles for both an AM rally or an AM decline. So the first one, AM decline, AM rally into a PM rally, AM rally into a PM reversal, AM rally into a consolidation. So if I have an AM rally, I have 3: AM decline, PM decline, AM decline, PM reversal, AM decline, PM reversal for consolidation. So if AM has rallied, I can only now look at 3 profiles. I've eliminated the AM decline profile. So I've set up a PM session based off of only 3 possible outcomes. Then I use my lunch range, 12 to 1, to look for just right in here this small little piece of price action. And I'm looking to see, do I get a lunch sell side sweep into the AM rally leg? Do I get a lunch sweep defend or a sell side defend into a bullish 130 run into a previous array? Or do I get a complex lunch, so more than one swing point in lunch, which is indicative of a PM rally after an AM rally. So let's try and merge that one more time. So I know it's an AM rally. I've eliminated 50% of my profiles, and I now see that I've got only one of 3 PM options left. So let's put all of those beside each other. One second. All right, so back on TradingView, and we've only got 3 options for our PM session, right? Because we've now defined, we've seen now it's 12 o'clock. We saw that the AM session had a rally. The AM session had a rally, and realistically there's nothing else to the left that it would key off of, but we know for a fact that the AM session had a rally. Regardless of what was to the left, regardless of whatever may be over to the left, we know for sure that the AM session was a rally up until midday. So now, are we going to have AM rally to a follow-up rally, AM rally to a reversal, AM rally to a reversal consolidation? So now we need to set out some other parameters. So if it were a consolidation, we would be trending back towards 930. Okay, so at this point at midday, we're waiting for the lunch range to play out to see, are we tending or trending or forming any sort of price movement back to 930? If we're not creating anything here, so for example, did we see lunch start to break in the premium of the AM rally? Lunch did not break into the premium. In fact, lunch started to push higher. So here is 1 o'clock, and here is noon. So in this movement between 1 and noon, price was not forming any movement into the AM rally leg. So you see here, for example, we're looking for that price movement to start to retrace into the AM rally leg. We don't have that. We also don't have any sort of SMT on the high. Here's NQ below, for example. So we always keep one of the indices with us as a correlating step, 6 CISA, or we want to see some sort of SMT or correlation or break-in correlation. And we did not see anything with the AM leg where the lunch swings were forming in the premium of the AM leg. So right away, because before we even get to the PM session, we're not seeing any sort of breakdown to consider a consolidation. So we eliminate that profile. So process of elimination continues. We're either going to see a swing high to displace lower, and we can use the lunch price action to help us with that. And again, lunch starting at 1:30, so this is 1 o'clock. We would need to see a significant rally at 1:30, and in our silver bullet, we're looking for that displacement. Now these rudimentary diagrams, ICT says this in the training videos, in the mentorship videos. This is just a representation of price's movement. It's not every single candle going to be straight bearish. It's a representation. Now, it could be, but more than likely on a lower time frame, you'll have those small deviations in price where you can get a retrace. So we see from the lunch macro, those ranges that are created for between 12 and 1. We have a low, a high, a low, a high, a low. It's a little bit more complex. So we're really not looking at this profile either, because this is a very simple profile into a higher time frame PD array. There's nothing really over to the left. You can see at this point here, lunch has already swept this high, and there's this range way back here for a fair value gap, but we're really not, that's not the consideration. You want something a little bit more immediate in price to be keying off of. So you don't have that. What you have instead is this kind of complex swing, 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 like multiple highs and lows, which in and of itself is a sign, because the more complex lunch macro is the one where you have a PM rally after an AM rally. So we're keying off of the fact that the AM session was a rally, so that eliminates 50% of our profiles. We're also looking at what is the lunch price action doing. Looks so distracting. So what is the lunch price action doing between 12 and 1? There are methods to trade, but that's not the question, right? The question is, how do we frame the model for the PM session in the most confident way possible? So using that logic, we're looking to see what will that PM session give us. And what we're seeing here is after in the Silver Bullet, we start to see that price continues to break the range high, again giving us a continuation. So because of that continuation, there is no decline in the Silver Bullet. So at 2 p.m. we would have expected some sort of price shift below market structure. Instead, what we see is a continuous push up. Now this is where the patience game comes in, because within the Silver Bullet, you have to wait and use the price action to the left, particularly the ranges, to then give you what is your ideal entry, which is not always going to be all of the move, whether you use a volume imbalance, whether you use a fair value gap, whether you use an order block, but it will give you a piece of the move that is sufficient to satisfy a 5-handle run up to that daily high. And the time of day that that executes is right at 3:30, and then you get that pullback off of the 3:30 because we've reached that daily high. So using the previous session information is one of the strongest ways that I found to define what range is being used. And that really goes for everything. So the AM session is taken off of month 8. So let's look at that. So month 8 uses these schematics to tell you if you've got a 8 o'clock to midnight consolidation, a sweep below a low, a rally higher, then you'll see a breakdown in London, taking London's low and giving a continuation model through New York. So let's take a look at these profiles. There's only 4 of them. I think there's one that doesn't get covered enough, which is like a range breaker consolidation model. So it just kind of wish-washes on both sides of the range. So let's take a look at this one, where we're going to see that this model, just grab that real quick. So here you see this is the way that we can combine models. So we don't know yet about the PM session. Right now we just want to get a sense of what is the AM session going to do. So there's only 4 models, and realistically there's 5. There's a seek and destroy model that there is a way to actually trade it. But this one here, you'll see you have your consolidation midnight to 8 o'clock to midnight. So that's your consolidation. Price will then run higher in London, so right around 2 o'clock. So between here 2 to 3, price runs higher. That's that small move there. Price will then run lower but not go below the Asia range low. So we have that here. Price does not go below the Asia range low. Then we see run up between the London open and a breakdown in New York. So we get something like that here. It's not your best run up, to be honest. Now we see in New York, we have from the New York open until the London close, an aggressive push outside of the London range. So this is the London open, London range, price pushes up aggressively. We get that here in that London open until noon New York time. Price pushes up above both the Asia range and the London range, and we see that forming here. So right away at 2 o'clock, when we see that Asia's low is not taken, we can start to formulate a bias for the AM session. Now we're waiting to see those signatures in price. So from here, liquidity left above right here, so buying below the midnight open. The liquidity is here in buy side, here, 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 and here. All that liquidity is what gets run out in that movement going higher. Too smooth, right at the top, right at the midnight open. But for your AM session setup, you're framing what was left for this fair value gap and what's left at the midpoint of that fair value gap, which is right at the midnight open, where the breaker is. So low, low, high, lower, low. All of this price movement is considered one price movement up. So everything inside of this breaker from high to low. So you've got all of this. Once that 930 push comes through and we see price starting to tease above that high, the reason why you're not looking at this move down as a form of some sort of bearish shift on a lower time frame is because you're using that London range between that London open here where price sweeps below, sweeps down but doesn't close below Asia, and you're seeing price then rocket up, and you're anticipating that in New York until noon price will run up. Once you get that run up, then you start combining it with your other profiles, and you're saying, okay, well, if I had an AM session rally, I've only got 3 left. So I mentioned before that there is another profile that doesn't get talked about, which is this idea of the seek and destroy profile, which happened today. So midnight Asian range, you start off with that, then you start putting in all your different ranges. So let's throw those in real quick. So once you start putting in your ranges, you can see, okay, so here's Asia's range, high was taken, and then London's range, lows were taken. Then we had that midnight to 8:30 range, high was left, low was left, high was left, lows were starting to be taken, but all of this is just consolidation. Ignoring the wicks for a second, right? There's no continuation like a model B. So the range gets created, but we're not breaking out of that range. So what we have instead is this kind of, I don't know what you want to call it, but it's just, it keeps going both sides of the range like a seek and destroy. So the way that you would use this and the models, you say, okay, well, I see the London range, both the low and the high was taken off London. I'm expecting both the low and the high to be taken of that range. I'm expecting that to be basically the play of the day. So low, high is taken, low is taken off Asia. Low is taken, high is taken off London. Low is taken, high is taken off midnight to 8:30. So what do I expect to happen with the lunch range? High is taken, low is taken. So here's that 9:30 open, and anytime you see price continuously gravitating around the 9:30 open, right away you're thinking consolidation profile. So the AM session is a decline, and there's only 2 consolidation profiles. So was I on the wrong thing this whole time? That's annoying. So this is that, that's annoying. So Asia range, London range. So what I was saying was that it kind of creates this whole channel, which is very hard. It's like a seek and destroy. And so the seek and destroy profile is hard to measure, but realistically you can use ranges to still see a pattern. So Asia range, both sides of the range are taken. London's range in blue, both sides of the range are taken. Midnight to 8:30, both sides of the range are taken. So what we do expect for the lunch, both sides of the range to be taken. So there's only and here's that 9:30 open. Anytime you see price always returning to that 9:30 open, you're looking at the consolidation profile. Now we can go back to this page. Then there's only 2 consolidation profiles. There's an AM rally consolidation and an AM decline consolidation. So what we have is an AM decline. So let's just grab that. So AM decline, right? So whatever happened in the AM session, you know, if you saw something in the Silver Bullet or not, which there really wasn't anything because you don't have that 8:30 or midnight price sweep, you do see that you've got this running lunch. And once you create that lunch, what you see here, AM decline, right? So that's an AM decline. Once you get the AM decline, let's bring this to the front. So once you get that AM decline, now you're looking at this price action in lunch, and you're saying, okay, well, I'm anticipating a price run coming below the lunch low at 130, and it could challenge the AM low, and then I'm expecting to see a run up, consolidation, and this is just going to be relying on time of day to see if it's going to go higher or push down lower. So we get back that 930 run. Here's that Silver Bullet. Bodies challenge both the lunch low and the AM low. Then we see that push up. We're expecting to see price clear both the AM high and the lunch high. So that AM high from 930 is here, and the lunch high is here. So that price movement in the PM is expected to clear both the lunch high and the AM high, and that's what we get right here at 4 o'clock. So price makes that aggressive run clearing both, and that's why it's saying rely on time of day. Is it going to be coming in your final hour push? Is it going to come at the 230 rally? You know, so what we saw was 3 consecutive candle run up, didn't break any structure high, retrace coming down, another consecutive candle push up. We finally see here this market structure shift, because this leg, this is the leg that it broke, this leg that it broke, no fair value gap. So if there's no fair value gap, we go straight to our rejection block play. So if there's no fair value gap to validate an order block, then we're looking at the rejection block, which is the wicks of the base. So we get our rejection block play there. Oh yes, there is an order block and the body stay within, which is right around 930, which is not a coincidence because we know that the profile is calling for consolidation. We knew it was calling for consolidation since Asia. Once you start seeing both highs and lows being taken, and you see price just meandering around at 930, it's always returning to 930, immediately you're thinking consolidation. And it's one of two profiles. And so you're looking for either this AM leg to be retested, so right in here, that propulsion block. So this was a trade I took today. So this propulsion block, which was based off of this order block's range break. So price breaks that range. There's another order block created right after with a fair value gap validated. So now we're taking the propulsion block. Price actually came all the way down to the original order block, and then we were expecting to get above the AM high. So this AM high here was the target, knowing that price was then going to come back down because that's what it's been doing all day, right? It's been taking both sides of the range, and then waiting for the PM to see when and how price would then make a market structure shift. This is not bearish. So why this is not bearish is because of the range. So the range we're working off here in the PM, let's just call that our range high. So the range we're working off the PM is exclusively the PM lunch range. We're not looking at the AM anymore. We're past that. We've already determined that we've got only 2 profiles at play. So now we're only looking at this range, and you cannot be short if price is taking both sides of the range and you're back in the range. So again, there's only 2 models, and in this case price is back inside the range. If I'm back inside the range, I cannot be short. I can't be short until I'm in the premium of the range, let's say that. Right? If I'm still in the discount of this range, then I can't be short. There's nothing that would give me any confidence to try and be short here. So if I'm still below discount, then I can't be short, right? So I know that this is the range I'm working off of, and so long as I am down in discount, I cannot be short. So that premium run takes you back down to discount of the range. We know that we've got this market structure shift here. This is relevant only because of the time of day. So the silver bullet macro has played out, right? 2 o'clock ran down, came below the range. We had these rejections off the base of the range. There's no continuation. We break back into the range. We're back into the range. We have this small fair value gap validating this order block. Order block holds. We have another swing high. That swing high gets shifted. So the only thing left to do is to look at this leg and look at the anatomy of this leg to see where is my discount array. So yes, we have an order block because of that shift. There's no fair value gap in here, so the validation of the order block is a little bit less. So we go to the rejection block, and the rejection block is the wicks. And so we use that, and that gives us that 350. I mean, that is so aggressive against all stops. We're anticipating it. Whether you know how to trade it or not, that's not the point, right? You're anticipating that this is a consolidation profile. So price is going to stick around at 930, and then we're waiting for time of day because we still need to see this. We still need to see this. We haven't seen price take the AM high and the lunch high as yet. So this AM high and the lunch high or let's call it a early PM high. So this was at 110. So it's still before 130, so it still counts. So these 2 highs had not yet been taken in the PM. In this PM session from 1:30 until 4, 1:30, which is this first half an hour, until 4, we're looking to see that aggressive run above those 2 highs, and we hadn't seen it yet. So we're not looking for shorts. We're not looking at this fair value gap as an area that we want price to retrace to. We're back in the range, and this fair value gap is even outside of the range high, so we're really not even looking at that at all. Like, you should not be looking for a short above the range high unless it's a in time displacement, and you should not be looking for a long if you're below the range unless you're within the time of a macro. So a little bit lengthy, but hopefully that kind of gives you a sense of 2 days how you could use process of elimination. Look at the AM session, look at the London session, look at the Asia range, see where the liquidity is left, then take the AM session as your best opportunity to then know what the PM session is going to do. Use a couple of tools like the 9:30 open and midnight open, and with some practice it will become super clear. All right, hope this helped.